Good morning, good evening, good afternoon, traders. Steve here at Logic FX Trading, and welcome to our trading room recording. It's actually Sunday, the 2nd of May 2021. The reason I'm doing it on Sunday is this is going to be a weekly review, guys, or a weekly analysis of the FX charts for the week coming ahead, guys. We do these on a daily basis, but I just decided to start doing a weekly one and put it out on YouTube. So, since it's weekly, let's take a look at the economic news, the economic calendar for the week ahead. May the 3rd, United States Manufacturing PMI final, ISM Manufacturing PMI coming out tomorrow. We'll have to see what they are. If you don't understand what I'm talking about, you're just going to have to stick with us, guys. We will, over the coming weeks and months, you will pick up on what we're talking about. Now, tomorrow, certainly in the UK and probably the rest of Europe, it will be May Day holiday. So I suspect the markets in London will be closed. Talking about the stock markets, guys, I'm sure that the FX markets will be open. May the 4th, which will then be Tuesday, we have Reserve Bank of Australia interest rate decision. They will probably leave it at 0.1%, guys. As you know, none of the reserve banks are moving their interest rates at the minute, but they usually have some sort of bond buying scheme or, monetary scheme running alongside the fact that they've got the low interest rate. So we're looking for any tapering on that, or even maybe an increase in their bond buying. Not expected to see them doing that, but it's the change in this, the tone that will give us a direction, guys. As it is, I think the Aussie should go long this year. We're talking about the long-term trend. We're not talking about what it's necessarily going to do tomorrow or this week, but the long-term trend should be up, as with the CAD. Looking for balance of trade in Canada tomorrow. Tuesday, didn't we say? And New Zealand employment and unemployment rate. At the moment, I'm a little bit unsure what's happening between the Aussie and the New Zealand. I have been trying to trade it long, but we may have reached the turning point. Not 100% sure of that, guys, but we'll work it out as the next few days and weeks go by, guys. UK Bank of England interest rate decision, the same as the rest. They'll probably not move that, guys, but we'll just have to hear what their tone is. Last time they spoke, they said they were very confident about the UK's economy growing. It just depends whether they're prepared to start cutting back on other stimulus, guys. Aussie, then on, that's their monetary policy. They don't do it the same day. Often, if the Fed comes out with an interest rate decision, they often tell you immediately. They have a press conference immediately. So this is their statement. Their statement will then come out on the 7th. So we've missed the day there, guys. The 5th. Sorry, that was Wednesday. So this is Thursday, 7th. That must be Friday then. So we'll get a statement from the monetary policy. So you may not get a reaction on the Aussie until that statement comes out, guys. It depends. And then with Mexican inflation rate, I don't trade the Mexican peso, but nonetheless it's there. Employment change in Canada, unemployment change in Canada, rate in Canada. Quite a lot out this week, guys. And then the biggie, the monthly non-farm payrolls in the United States. US economy looks like it's going fantastically well, guys, but the Fed keeps saying that they're not budging, they're not going to taper, they're going to keep the tap open, which is the reason why the dollar's continuing to fall. Well, we'll look at the chart in a minute, guys. It's quite difficult at the minute to get a direction on the dollar. I suspect it will drop either to the previous low of a couple of months ago, or it may even break that, but eventually it'll come back up. And the reason it'll come back up is if there's any inflationary threats out there, they'll start to taper taper the bond buying, and that'll give a bit of strength to the dollar. And then obviously, if we start seeing a bit more inflation, you'll start to see the dollar coming back up again, guys. You're comparing it to the euro, the yen, the pound, the Swedish krona, the CAD. And out of all of those, and I've probably missed one out there, the Swedish franc, guys. That's what your DXY is. And out of all of those economies, the US is definitely the one that's going to grow the most this year, guys. So I can see it, a bit of tightening. You might even see the bond rate starting to creep up. So that's the thing to keep an eye on at the moment, guys. Obviously, the Fed month on month, we've got to listen to what they're saying. But in the meantime, the market may just decide for itself. If you see the bond yield starting to go up, you'll see the dollar go up with it. Okay, so that's the economic calendar for the week ahead. And then what we do here is we start, we go through all of these charts, guys, but we start with the markets. We do this on a daily basis anyway because it gives us an idea of what to expect when we're trying to trade individual stocks. I don't trade the markets anymore. I used to, but I got it wrong so many times that I realized all the hard work I was putting in wasn't worth it, so I don't trade it anymore. But we use this as an idea and as an indicator of what to expect in your portfolio for that particular day or this particular week, guys. And then we determine whether we're going to invest more or whether we're going to take something off the table to protect ourselves against a big drop. Obviously, you can't take everything off the table. If you keep taking everything off and everything on, you're trying to time it, then you're definitely not going to be successful. But if we do see situations where we think, now this is on a daily time scale, guys, where we think we're going to get something like this or even something like this, now that doesn't look like much on this chart, but if you're living through that, that's a whole week of downward movement, and every day your account's lower and lower and lower. It can really start to work on your psychology. And sure enough, on the fifth day, and when it does that, it opens down there. You've lost even more money, and that's where people panic and they sell up. And the next 7, 8, 9, 10 days, it goes up, and they look and they go, "Oh my goodness! If it had stayed in, we would have done well." And then they start buying in here again. And then they get this. So sometimes, yes, you can take some stuff off the table, but don't clear the table, guys. Unless you're expecting a much deeper correction like that, or even a bear market like that. I assume that's a bear market, guys. And given how far we've moved recently, we're going to get a correction, guys. There is absolutely no doubt about it. This is the biggest move. I mean, if you go back, we'll just dwell on this a little bit. If you go back to here, from the end of 2009, right through to here, we had 10, 11 years of continual upward movement, guys. And obviously with our corrections within it, you can see them all along there, but with 11 years of upward movement. But even that, and people were saying then, and I was saying back here, you can even, I left that arrow in. I've refused to move that arrow because it just keeps reminding me. In 2019, I was looking for a drawdown from here, and I was trying to trade it short, and we got this, and it bamboozled me because at the time we were looking at this and we're saying, this has come up so far that isn't a big enough correction. Technically, that wasn't a big enough correction, but I was bamboozled that it kept going up. And sure enough, we got our correction, guys. So if you take it to here, you can see why that was a 25% correction, just over 23.6 in the fib. I've put 25 in to let us see it here, guys. That was a 25% correction. Just wasn't big enough for 11 years of upward movement, guys. And when it came back up to here again, I was saying we need it to move into this space because that correction isn't big enough for that move, guys. And what happened? Bang! There was a 50% correction. And we pull it up, you'll see 50% correction, guys. So what took probably 12 years by the time it got to here, 2009 to 2020. Yeah, sorry, that was 11 years. It was 11 years to here. I think it was 9 or 10 years to over there. So 50%, and obviously people get in and out of things, guys, so not everybody would have been caught, but an awful lot of people were caught by this. I think I lost $70, but we were trading a very small account, talking about our training account, guys, that we have. And the reason that I lost money was that I tried to buy in here, and it continued to drop, and I lost a bit of money on that move there. Remembering that this move happened in all of the charts, so it wasn't actually this chart I lost money on. It was CAD Swiss, I think, and then what was the other one we lost money on? US South African Rand. And that was actually when things started to recover, because I thought it was a bit more downside. Okay, so the point I'm making is this has moved so far, so fast. And if you want to copy that, guys, just trying to think where the copy bar is. If you want to copy that and take it back through all the years, there has never in the history of this chart, going back, where are we now? 02, how far back does this go? You know, it has never in the history of any of the charts made a move like this, guys. It's going to finish. I'm not saying it's going to finish today or tomorrow or next week, guys, but it will finish with a bang. And what we've got to do is make sure that we don't get caught. Listen, you're not going to not get caught by it if you're going to be trading. The only way not to be caught by is to sit in your hands and wait for it to happen. But we don't know when it's going to happen. It could be, I think it'll happen whenever we start getting inflation figures coming in. And if you remember a couple of weeks ago, when we had inflation fears, and let's go down to the daily and we'll see it. With the inflation fears, and the bond rate started going up, and we ended up with, we ended up with this. And this caused a lot of panic, guys, because people were getting caught out. It fell again. Is this the right place I'm in? Let's look at it on the NASDAQ, because I'm more au fait with the NASDAQ, guys. So 1 hour, let's go to 4 hours. This is the NASDAQ. Now, the reason I'm more au fait with the NASDAQ is because most of the stocks that I trade are in the NASDAQ. All those growth stocks that everybody's mad about were all in the NASDAQ, guys. That's why the NASDAQ's so important. Now, you may have stocks that are in the Dow Jones or the S&P, but most of the growth stocks, the new industries, etc., are all in the NASDAQ, guys. So here it was. This was the bond rates going up. The yield, bond yield in the US, the 10-year yield was going up, guys. And the market started to panic, because at the end of the day, most of the companies have got massive borrowings, guys, particularly growth companies. They've borrowed lots of money, and if the bond yield's going up, that means that interest rates are going up, which means that the market may see something that the Fed doesn't see, or maybe the Fed sees it and they're just holding back. When the Fed starts to taper, when it starts to move towards there's going to be higher interest rate, guys, you're going to find that the valuations that people have on the growth stocks are going to have to come down. They're already massively overvalued. But if you start putting bigger interest rate on there as well, then the valuations are going to be corrected, and corrected in a massive way, because the big hedge funds, the big investment banks, they're going to offload very quickly, and they're going to offload by the million, the billion, billions of dollars worth at a time, guys. And that will cause things like this to happen. And we will just waken up, and all of a sudden, you're in this, and is it getting worse and worse and worse? and everybody's in a panic. So when that happens, we don't want to be getting caught out in it, and we want to have an idea that it's potentially going to happen, and therefore clear the tables, take some stuff off the table. Some of your really bad stuff, take it off the table. Some of the stuff that's very close to zero, take it off the table. Some of the stuff, that you've got good profit in, take your profits. Clear the table a bit, and then wait and see what happens. Now, that's what we did back through here. And then we got this. Now, on the way down, using our Elliott, we went 1, 2, 3. Now, when you get a 3, there's always the possibility that you're going to get a 4 and a 5. But usually, if this is going to be a third wave, it would have to extend. So when we were in this period of time, we were very wary that this was going to extend. And then you get a 4 and a 5, and then we'll see where it goes from there. But when it started to come back up here, we got the relief was, hey, this looks like it's going to be an ABC, giving you a flat correction. But then there's another worry. And of course, once it did that, we were able to get the money back on the table and trade up to here. Now we're in a little flat. When we got to there, we said, well, there's always the possibility that this could be a 1, 2, 3, pushing on up, 4, 5, probably a flat. Turned out it didn't break. Well, it broke the top, but not as much as I thought it would, guys. And now we're in a little flat. I suspect we're going to get one more up. A fifth wave. 1, 2, 3, 4, 5. There is another alternative, guys. Although I don't think this is as high a probability as what we just said there. And it's this. And I was really worried about this at the time, a week or so ago. I was really concerned about this, guys. Is that when you get an ABC, flat correction, often you'll get an impulse down that will usually break that bottom before you continue on your trend. That's your trend there, guys. That really worried me. And I've taken a lot off the table again. It's always hard because you see good companies and you've not cash on your account, and you think, let's just buy this and we'll see. But if you get caught, guys, it's going to be painful. You're going to have to ride through it. But if there is a move, I think it'll be a move like that initially. Okay. So at the minute, there's always the possibility that this is a 5. So if we get one more leg up, then I'll get really worried, because then this should be of that order of magnitude, guys, if it comes. So at the minute, I'm kind of betting on a breakout here because this is a flat correction. I think if this was going to turn into an impulse, it would have already gone. Okay. So, and there's fundamental reasons why I think it's going to go up. And that's to do with the Fed's attitude towards continuing to pile the money in, guys. And the bond rates have kind of come off. The yields have come off the that increase that they were in. That's tapered off again, guys. So I think we'll get another leg up here. But once this leg's done, then we have to see, from Elliott point of view, you could end up with, on this time scale, you could end up with a flat over here, guys. But I'd certainly like to see prices moving back towards, that side of the channel, either through a correction like that or just a period of time where they run flat. Now, if it runs flat, that would be a lot nicer for us, guys, because, you can get in, get out, get in, get out, get in, get out, get in, get out. And the worry is, but when you get in, that if it is going to be deeper, then you've been caught on the wrong side. But we'll look at these, on a daily basis. We look at individual stocks. We look at, what the charts are doing. We look at the individual charts are doing. We look at the fundamentals, and then that's where we make our decision. So at some point, there will be a big correction. I don't think we're there yet, but there will be a big correction. So in the meantime, what I'm doing is I'm trading cautiously. Okay, and by cautiously, what I mean is I've got a very low target. Your targets can be technical or they can be, percentage. You could maybe do a monetary target, but I'm running on a 5% percentage target at the minute. So if I buy a share and it gives me a 5% profit, I'm out of there. Sometimes overnight you'll get an 8 or a 9 or a 10% profit, and that's me happy as a well. I'm trying to think what to say without being right. That's me happy. Nowadays, often the things you say, you're thinking, well, is that racist or is that bad? So let's just say that would be me happy. So I think we'll get something like that. But guys, that doesn't mean it's immediately going to go from there where I drew it. What I'm saying is we're in a little flat correction. It could fall and break that. If it's a little ABC, it could easily fall and break that. But I think the next move will be up. So I don't think there's anything much to panic about at the minute. And then when we get to there, then that will be a case of, are we going to get another one of those? Or, is it going to run flat? Okay, so that's the NASDAQ, guys, which is probably the most important chart out there, which is the reason why I've spent so much time on it. Let's run through the rest. Back to DX, back to Dow Jones, and the same will apply for these charts as well, guys. Little flat, looking for it to break out. S&P, it's actually pushed on up a little bit, but it's still not, it's not accelerating anywhere, guys. So we drew this a week or so ago and just said we'll probably drew it from there, guys, actually, and then moved it across. Looking for a bit of a correction on it, but possibly there's more upside. Of course, if you look at that chart, it's bouncing its head off the top. But do remember that these are only guidelines, guys. The chart will do what it wants to do, regardless of whether there's a line there or not. The lines are just there to help us see structure. Okay. NASDAQ we looked at. Nikkei doing a little flat, as we said it would, looking for a breakout. UK continuing on up. What we have been saying with the UK is there's if then, guys. If this happens, then we do X, Y, Z. So in other words, if you wanted to trade that, I wouldn't jump in and trade that from there. Now, I don't trade the index anyway, but I'm just saying if there's any chart that this was, look at how it's moving, guys. Look at what it's doing. Well, obviously the trend's that way. So unless this is a change of trend, the fundamentals don't say that. So it shouldn't be a change of trend. Well, where would you want to get into that? Would you want to get in there? No. Why is that? Because it could continue to do that, but there's a pretty good probability that it will drop. That doesn't mean you trade it down, but if it does that, then you think about trading and you do everything else that you need to do to make your decision as to whether you're going to trade it or not. All the technical analysis does is give us ideas about, is this a good place to get into something? Is this a good place to get out of something? Or do we have to wait? Now, most of the times you should be waiting for things to set up. And once they set up, then you got to make your decision whether you're going to take the trade or not, guys. So what I've been looking at with this is if this were to drop, then I would think about trading that chart long, but I'll not be because it's an index. French, same thing. From there, we were kind of looking for it to go a little bit flat. It's pushed on up. It's pulled back. We said from there, looking for a pullback. Sometimes they come back in lovely little zigzag, guys. It looks like it wants to go long. And other times they get down to where you've drawn it by going the straight line. That's pulled back in the straight line. Can it turn and go long from there? Well, it can, but that's not a setup for me. A setup for me is when you get a nice little flag or pennant or zigzag, call it what you want, because that really denotes that price is going to go in that direction, guys. Remember, there are literally thousands of stocks to trade, and there are probably 50, 60 currency pairs. There's all sorts of things to trade, guys. So you don't need to jump into everything that you see. You need to go through them all analytically, find the ones that look like it could be something, then do a bit more, and then make your decision whether you're going to put your money on it or not. And the more you do of that, the better a trader you'll be. German, DAX, same thing, looking for a correction. We're in a correction. At some point, it'll start to go long. China, now, we were a little bit concerned about the Chinese after we got that impulse. Because going technically, you get an impulse, you get some sort of correction. Often it'll be a zigzag before you get another leg down. But it can be a flat, and there's a little flat. So when it started to do this, I said, hey, if it gets down to there, we didn't believe in it enough to want to trade it down. But if it gets down to there, and why there? Because it's double that. More or less. Yeah, maybe a bit lower. But if it starts getting into that area and starts coming back up, that would be a good place to try and trade that if you wanted to trade that chart. I'll not say it again. I don't trade indexes. That's the last time I'm going to say it. Until next week. Okay, so it didn't do it. It's still running flat. There is still a possibility that it would drop again, but I'm not convinced. Sometimes what you get is when you get an impulse, you'll get an ending diagonal on it, guys, which this is possibly one of those. Now, I haven't examined it down here to see if that's what it is, guys. Probably have to go out to maybe the daily time scale. That's too much. Let's go to 10 hours. It's probably too much still. 4 hours. Yeah, 4 hours is okay. No, we're not getting a great difference in there that would indicate an ending diagonal. Usually in the ending diagonal, guys, you'll get, a higher one and then a lower one and then maybe a small one and then it goes. We haven't got that. In actual fact, when that moved down there, it actually started to come up. So don't think it's an ending diagonal. So then what you've got to do is go back and look, is there anything equivalent to it where you could say, hey, the last time I did this, it continued down or it turned and came up. Maybe that's a smaller time scale, guys, but it's come down, it's run flat, and then off it went. I suspect, not because of that, but, I suspect just looking at the way the world economy is going, things are opening up. I suspect this is going to start climbing back up from here, guys. Aussie. We called it in here flat, flat, flat. And we said it's going to go long. It's gone long. Now it's going flat, flat, flat. Could give you a little one down, but the next one should be up. Russell, it's running flat, guys. You can see the arrow I put in there the other day. It's running flat, but I think eventually it'll push up. And then, of course, we will get our big correction at some point further down the line. The VIX, look at where it is, guys. Look how low it is. Now, this is your bet against the market going long. I don't know the last time it was this low. Has it ever been this low? Look where it's come from. Madness. Madness. So what's the big deal with the VIX? Well, when there's a bad day in the markets, it spikes up, guys. Bad day, dropped. Couple of bad days, dropped. Next time there's a bad day, it'll spike up. Dow Jones. Oh, DXY, look at that. I didn't look at this. I haven't looked at this since Friday afternoon, guys. Oh, I'm so pleased about that. in some ways and not in others. I chickened out. I traded a few dollar. If we go back from here, I basically said, listen, this is going to run flat or maybe up in a diagonal, but we're not expecting the dollar to go up into this space, and we're not expecting it to go way down into this space. So if we go back out into, say, the 4 hours, we're expecting the dollar to kind of range either between here and here, or maybe even there and down there, 138. You say, well, what good's that to me? Well, it means that it's going to bounce back and forward, guys, which means you have to trade it in a different way to the way you would trade it if it was moving impulsively. That's what it means. So if we go back to here and we copy this, this was a nightmare for me because the trading strategy I was using here was wrong. And that's why it's so important to get an idea. Is it running flat, or is it going to go impulsively? So we've determined that the dollar's probably going to be happy in a range here somewhere. What it exactly looks like, of course, we don't know. But because we know it's running in a range, if it either gets to what we think's the top or the bottom, then for a period of time, whether it's a few weeks or a week or whatever it is, we know, hey, the dollar's going long for the next 2-3 weeks. We'll trade it long. And then when it starts to get to the top of the range, you become wary. And you say, okay, let's stop trading the dollar until we either confirm that it's going to go impulsively or we confirm that it's going to drop back down again. And then there'll be a period of time when you don't know. And then you stop trading it. And you go and you look for something else in that period, guys. So what happened over here? Well, if you go way back to here, every now and again, guys, the charts do exactly what Elliott says they'll do. and they're blatantly obvious. Not all of the time, but they're often blatantly obvious. And that's the time to take full advantage. And then when they're not blatantly obvious, guys, don't be trying to be overly smart and think that you know, or you should know, or that somebody else knows. Most of the time, people haven't a Barney what's going on with the charts, guys. But every now and again is blatantly obvious. And back here, when we got that fourth wave, now we're on the daily time scale here, but obviously at the time we were trading it on the 1 hour time scale, putting charts out in the 4 hour time scale. In fact, I haven't been putting many charts out the last couple of years, guys. That's why I've got to go this far back to show you a good chart. But it's an important chart, and that's why I often refer to it. Oops. Leave that out of the way. So, way back here, this had been an impulse down, guys, and we got this. Right here, fourth wave correction almost complete. And put a question mark, because there's always a question mark, guys. You never say anything definitively, because the day you say something definitively, the market will do the opposite thing. Because you can't be definitive with the markets. We're talking probabilities here, not definitives. So what happened? On that day, I put a chart out and I said, this fourth wave's almost finished. Put the C up to there because I thought, well, despite the fact that that's there, you could have a bit more movement. But then we're going to get a move down. Where's your first target? Well, it's going to be the bottom of your third wave. Where's the next target? Well, the next target, I think, did we actually put it in? It would have been 127 extension of your third wave, which would have been down here somewhere, guys. So what happened next? It's too old now. They won't give us it. So we're going to have to go back to this. Well, what happened was it dropped, came back up to the top of where I'd drawn that little chart, or that little, you can see there. So it dropped here, came back up, and then it dropped. Where did it drop to? Well, there was the bottom of the third wave. And if we put an extension on the third wave, what we're looking for, first target, 127 extension. Think, haven't used this in a while, guys. Sorry about this. Oh, that, no, still hasn't come up. Oh, it's going the wrong way. Take it from the bottom back up. No, it's the wrong. Oh, come on. Let me pause you to try and get this thing to work. Don't know what's going on with these charts. Okay, sorry guys. I don't know what TradingView's doing, but for some reason these were all mixed up. Right, so we're looking for an extension. So that's our third wave from there, guys. Right. So that's our third wave. What's the extension of the third wave? 127. There you go. Bang into the 127. So we were doing all this back in September, between September, October, or September and November 2017, guys. And we knew then we were going to get an impulse down from there. And our first target was there, second target was there. It came into the second target. From there, we said that it would come back up into the region of the fourth wave, which is what it did. From there, Elliott kind of didn't work out for us because we were looking for, that was an ECB decision day. We were looking for a correction on this before getting another impulse up, guys. Which is the reason why I traded this incorrectly, because the whole time I was looking for an impulse and we didn't get it. We kept getting this sideways movement. But the one thing we did get correct was the top. And how we got our top was, yet again, it's all about Elliott here, guys. We measured from there to there as the first wave. And then we were looking for the correction. Initially, we thought the first wave was going to be there. Then it came out to be there. Okay. We were looking for a bit more downside to this. And then you take that to your downside and you put it up. So came out to there, looking for a zigzag down, and then your next move would be similar to your first move, just a zigzag, guys, on the upside down. So that gave us a target of 100 for the dollar. And that it actually came in because of the pandemic. It spiked above it. But we more or less got there back in 2nd of October. And then we were starting to look for the next move down. And then we got the pandemic, which caused this to happen, guys. But once the pandemic happened and we got way up here, we said, well, now we're going to get our next move down. Because from way back here, we said, 5 wave in an A position, you're going to get a pullback and then you'll get another wave down. And that's exactly what we've got, except for that run there, which went on too long. But we got our 5 wave there. 5 wave there, pull back, 5 wave again. Now, what we're trying to do now is, just as when we were in there, it was tough trying to work out. Well, the only thing about when we were trading there was we knew that it was going to go long. Here, we think it's going to run flat, but there could possibly be one more down, maybe into that area before it starts coming up again. And it could look like that rather than like that. And that's the big difficulty we have at the moment with it. Because we've had this initial pullback here. So everything was looking hunky-dory for a continuation of this type of thing. Not the whole way, guys. Maybe up to there. And then the bond rate started to fall. And this happened. And once this happened, it became quite difficult. Because I was still thinking You know, we're looking for something like that, but it had broken further down than I expected. So we drew this the other day, and we said, well, to be honest, I thought it was a little running flat, and we could well get a push out of it. But it's turned out it must be a bit of an ending diagonal. And if you look at it here, let's just bring this up a bit. See if it still works in the 1 hour time scale, guys. Not as well. Let's go back to 4. We're just looking at this piece here, guys. Price is dropping, but the momentum's pulling back, guys. So it's an ending diagonal as opposed to a running flat. If it was a running flat, it would have dropped out of it. In fact, it's an ending diagonal. There's your divergence there. Difference between that direction and that. There's a divergence in the direction of the two of them. But if you draw the two lines, they're actually converging. They're coming together. But that's your divergence, as they call it. So we've had a push up. Now, I'm not expecting this to go way up there, guys. This could well be a 50% retracement of what we've got there, because that's what you get with these are still causing me trouble, guys. That's it. So this could move up into that area easy enough. And of course, it's not necessarily going to go in a straight line. But it could come up and pull back and up and pull back and up and pull back. And if it gets to there, and depending on what that structure looks like, I'll be looking to trade it down, guys. And the reason for that is that the European economy should start opening. And remembering 57% of this is the euro. So I can see this pushing up for a while yet, and when it gets up to there, this time next week, we'll start to decide whether, depending on what the structure looks like, will determine, because if it goes up like that, then we'll say, hey, there's your impulse, there's your correction, let's get our next impulse down. Well, what happens if it's impulsive? Well, then, that'll be a different thing. But don't expect it to go any higher than there, or possibly there. But yet again, it depends what the structure looks like as it's coming up. So at last, we've got something here to work on, because as we come down here, the whole of last week, we were saying, well, we need something over here, guys, to either tell us that that's the bottom and it's going long, or to say to us, well, that's a little correction, we're going to get another leg down. The fact that that's impulsive kind of makes me think we're going to get another one down. And the fact that the Fed came out the other day and just said there isn't any way we're going to strengthen up. Now, there's one thing else we want to say here while we're talking about this. We've got to remember the dollar smiled, folks. And it's this. The dollar's high for two reasons. One, when the rest of the world economy is bad, the dollar's up because of it's the best game in town and it's safe haven. And the other time that the dollar's up is when the US economy is doing well. Right. So when's the dollar down? Well, the dollar's down when the US economy is going badly, guys. And then you get what they call the dollar smile. So it's good when the rest of the world's bad, and it's good when the US economy is good, and it's only down when the US economy is struggling compared to the rest of the world, guys. So it doesn't, it doesn't look like a smile all the time. You're not going to go around seeing that sort of thing on a DXY chart. But we understand the underlying sentiment of it. So that's the reason that once this is done, if we get this down, then that'll be done for me, guys. And then we'll be looking for it to come back up. And that'll be the reopening of Europe. That'll do that. But once Europe reopens, once they get their economy running again, everybody will realise that the economy's rubbish compared to the US, and then people start coming back into the US, particularly as inflation starts to rear its ugly head and the Fed has to finally go, hey, we're going to start to taper, and you'll see the dollar coming back up. Now, is that going to happen in 3 or 4 months? I've no idea, guys. But you'll probably find if we look back on this in 6 months' time, 8 months, maybe a year's time, we'll go, hey, we got the drop and we got the push back up. So by doing that, and obviously ensuring that that's what happens, we've established our trend for the dollar over the next lot of weeks and months, guys. But we've got to watch on a daily basis to make sure that it's doing what we expect it to do. Okay, euro. There you have it. The other day I said, listen, we need a pullback on this. That was a video I did the other week, guys. We need a pullback on this. If it gives us this sort of structure, remember, if it gives us this sort of structure, there's the trade. Remember, the arrow shows you the trade. That shows you the if. That's the if, no arrow. There's the arrow. So if we get that, then we'll look to trade it up. Pound US. I'm long on this and was actually up here. Didn't take it, and now I've had to ride through all of this. So what we were saying the other day was if we got that, then there's the trade. I'm a little bit wary of that one now, guys, because if the dollar's going to push up a little bit more, you could well see a bit more downside to this. And then if the dollar starts to drop, then you would take that trade. Aussie, same thing here, guys. We said if you get a pullback, you'd trade it up. Just have to keep an eye on what the DXY does. If DXY starts to falter, then that will be the trade. We think this is going to range, or I think this is going to range, but we don't know where the top and bottom is. Same as with DXY, guys. We don't completely know where top and bottom is. Is it there or is it there? But there will be a range over the next 6 months, year. It's going to bounce around, guys. And, even if the dollar's going strong, I think this will range. Reason being that the Aussies, we're looking for Aussie strength. So is there a trade there? Is there not a trade there? Truth is, at the moment, I don't know. But if the dollar settles down and starts to drop again, then there will be a trade. And obviously your target will be there. Or it will be a percentage target, which you could well hit long before you hit there. New Zealand, you can see it there, guys. There's the trade, but we were looking for a setup. So why am I not saying that, well, there you go, we were looking for it to come down? Because we're looking for a setup, guys. That's a sudden movement. And I think there could be a bit more to it. Then if it settles down and starts coming long on DXY, then we'll trade it long from there. And it'll be a better trade because there's more distance. If you don't know, don't put your money on it, guys. CAD. CAD's strong at the minute, folks. But what I would do with CAD is wait and see if we get a bit of strength in the dollar. And if it gets back up to there, then maybe try and trade it down. I suspect this pair might be more like that. In other words, it's going to continue to maybe run like that. It comes up and then it drops, comes up and then it drops, which is okay because each time it comes up, you short it. And then when it gets down to here, maybe breaks the bottom, maybe reaches the previous low, take your profit, let it do what it's going to do, and it comes up, sets you up again, then you take it again. You just have to be patient with these things. And if that doesn't happen, then reanalyze what has happened, then decide whether you've got a trade or not. US Swedish krona. What we did the other day, that's DXY, guys. And we just put it over the top of it and said, look how close this follows DXY. And there you have it. You had the push up in DXY, and there's a little push up in this. I would say we'll see where this gets to. Now, listen, if on Tuesday or Wednesday this thing has set up to go long, then we'll say, hey, guys, there's a trade here. Because we listen to Bloomberg all day long. We watch what's going on with the bond rates. We watch what's going on in the markets. And if the fundamentals have said the dollar's going to go long from here for a period of time, then we'll try and trade these up. But for me at the minute, looking from the information I have now, I can see it getting up maybe 50% of that and then having another one down. Yen's been a little bit weird recently, guys. If you go over here and look at this, we had this move, this impulsive move down. So it was obviously going to correct. So it moved up. But when it got to there, what we did during the week is we went back. Oops, didn't mean to move that. We went back and we had a look at this and this. Because I remember trying to trade this long from here, guys, which was back in 2018. And we got this little move and we thought, well, that meant we're looking for a setup. And then up it went, but then it dropped again. Then it did the same, and it did the same, and then eventually it went. So from here, we'd kind of gone, well, this is going to trade long, but we had to go through this sufferance before it went. And it kind of did the same thing here, guys, where it dropped again. We said, okay, it's going to move long. And it came up, dropped again. Then it went up and got back up. And where else did it do? I think it did it 2 or 3 times, guys. Here again, you can see where it's come down into that level. We're looking for it to go long. Comes up, drops, comes up, drops, and then off it goes. So if the yen is going to respect that long-term trend line, which it doesn't have to, by the way, but if it is, then when it did that the other day and the dollar was dropping, the yen was going long, I was long US dollar yen, and it just kept dropping and dropping, and eventually I got out, and guess what's happened since it's done that? We'll look at the chart in a minute. Chickened out and missed it, guys. I could at least got my money back on it, which, you know, you need to hold your nerve when you're trading these things. And I don't always, guys. I get it wrong as well. The most important thing is at least get your analysis right. Then you've got to get your trading strategy right, and then you've got to get your psychology right to ensure that you're brave enough to believe in what your analysis and your trading strategy is telling you is going to work. And sometimes we don't. So I'm looking at this dropping. I'm going to keep a close eye to see if this comes up again. Maybe it only comes to there, drops again, and then we get our move up. Doesn't have to happen, but the fact that it's happened a few times before, it's worth keeping an eye on. So back to this. So I got long here. And, you know, with hindsight, guys, you know, we don't always do all the analysis we should do. With hindsight, for sure you're going to get a deeper move. But I got out somewhere around here. As it moved again, as it went again, I just thought, oh, I'm out of here. Look what it's done in the meantime. Would have been back to break even. So what's it going to do next? That's the most important thing. Well, the dollar's pushing up at the minute. The yen's pushing down, but they could well change within the next week, as we just saw there. So that could well happen, guys. Am I going to trade that? No, I'm not going to trade it. If we go in and look at this a little bit closer, I can't see it breaking the top, let's put it that way. So the closer it gets to there, the more certain I'll be of trading that back down. But we'll have to keep an eye on it. And the day that it gets wherever it gets to, I'll look at this and I'll go, hey guys, it's going to do that. Or not, as the case may be. But we'll look at that, and maybe it's Wednesday or Thursday, maybe it's next week, guys. But we will look at it again on this this analysis next week. Maybe with a better idea. China. Now notice how little that's pulled back against the Chinese yuan, guys. It does need to pull back, but it may just be a little flat. 1, 2, 3 in there somewhere, possible little ending diagonal. Could push up, but because of the yuan strength, could end up giving us a little flat in here, and then one more down. Would not argue with that, guys, but it's not there yet. Swiss. Let's go and look at what the Swiss is doing. The Swiss in the end kind of caught me out, because for months we were shorting it because they had been over subscribed to because of the from the pandemic. They got too high, and I said, well, okay, these have got to come off. But they've kind of changed a little bit. No, it's SPX. What am I doing? SXY. So this is where we were trading them down from from January. Short the Swiss, short the Swiss, short the Swiss. And it was the same with the yen, guys. Here, short the yen, short the yen, short the yen. And how I get caught out recently, because I hadn't actually come over and looked at these charts, and I'd just gone, hey, short the yen, short the Swiss, and they got this, and that's where I got caught out, guys. So you do need to look at all the charts all the time. So let's look at the Swiss. It was coming short. We're getting a pullback. But believe it or not, if you go and look at gold, that's no coincidence, guys, because 25% of the Swiss franc is connected to the dollar. Reflects the gold reflects gold, guys. So as gold comes up, you get a pullback. What was the gold doing prior to that? Dropping. You could actually overlay the two. There's not going to be an exact, correlation, but it's not bad. Look, gold price is dropping, Swiss francs dropping. Gold's going up, Swiss francs going up. The thing with gold is, guys, until inflation starts really kicking in, I can't see gold doing that anytime soon. It's possibly in the middle of the range. Could be a little bit more upside to it, but I suspect it will drop again. Now, at some point, I've jumped ahead of myself here because I just wanted to bring this in. We've had this massive correction after a big impulse, and that's what you get. You get an impulse, you get a correction. And for all you people that trade Bitcoin, you got to remember that, guys. You get an impulse, you get a correction. So at the minute, we're kind of in the area of the middle of that range. Can it peak up to the top before dropping? It can, but I suspect there's going to be more downside to gold. And then as things get going, as the world economy, as inflation starts to kick in, then you'll get people turning to gold. Now, there are people saying that Bitcoin's replacing gold, blah, blah, blah. It's replacing a bit of it, guys, but it'll not replace it completely, because gold's been around for forever and Bitcoin's been around for 10 years. So not everybody's going to put all of their money into Bitcoin as a safe haven, guys, particularly since it's so volatile. Now, if you were a long-term investor with, millions of dollars in a hedge fund and they were piling into Bitcoin, I would get a little bit nervous and I'd say, hey, what are you doing? I would take my money out of it. Because not everybody believes in Bitcoin, but everybody believes in gold, folks. Okay. Silver. Running. Oh, sorry. Got ahead of myself there. Where were we? Swiss. Oh, yeah, the next one was gold anyway, guys. Silver. Well, what I've said about silver is next time it drops, I'll buy SLV. Silver ETF, guys. Why SLV and not silver itself? It's just cheaper to get into, guys. Bitcoin. I'm looking for more correction on it, guys. I'm not saying for 1 minute that Bitcoin can't go higher than what it is. In fact, I think it probably will, but it needs a correction for all the reasons that we talk about every single chart. When you get an impulse like that, guys, it's got to come off. And we actually copied that from silver the other day, just to give us an idea of what it could look like. And that would be a 38.2, maybe obviously a bit somewhere between 38.2 and 50% retracement. So far, we've had it come down, what's that, 20, maybe 30%, and it only that was an hour or something, and then it went up again. I actually stuffed this up. I like talking about my failings, guys, because you learn from mistakes. You don't learn from getting it right. You only learn by examining your mistakes. I bought into Bitcoin. Listen, I don't buy it very often, guys, but recently I've been very tentatively getting into it and then chickening out and getting out of it. You know, you get into something, it drops, and then when it gets back to zero, you go, oh, I can get my money out, and you take your money out. Well, the other day when it made this drop, I looked at it and I said, you know what? That's a half decent drop. Looked at the previous one because I tried to get into it here and chickened out. And over here as well, when we got that drop, I got into it there and chickened out. I think I've made about, I don't know, 0.1% or something over that time. So it dropped again. I thought, come on, Steve, have a bit of be a little bit brave and get involved in it. So I bought in here somewhere, guys, and said, okay, this is gone. Then it was in the red. Then it was in the green. Then it was in the red. Then it was coming back, break even. And then it did that, and I went, oh, I'm out. And look what it did. In fact, almost from the minute I got out, it started coming back up again. In fact, within an hour, you can see that's a 1 hour. Well, within a couple of hours of getting out of it, I would have been nicely in the profit. Could have put my stop loss to zero and said, hey, I'm on a free ride here with Bitcoin. But I chickened out, guys. There you go. But that's the difference between your analysis and your psychology. Now, the truth be told is, if it had a drop deeper, I would have been a lot more comfortable with it. In other words, if going back to what we looked at, and I know this has taken a long time, but it is a weekly review, guys, here. Going back to what we talked about over here on the NASDAQ, do you remember we talked about, need to get out into daily time scale. Where did we go? Okay, there it is there. It's not as obvious in this one, actually. Dow Jones was the one where we did all the analysis. This is where I think we are with Bitcoin. We've had this massive move up here, guys. Up and up and up and up and up. And if you took this out to the weekly, you could probably make it look a bit more like Bitcoin. This massive move up. Although this was 10, 11 years, whereas Bitcoin's happening in months. But you get to a point where you go, do you know what? This needs a good correction. And if it gets a good 50% correction, I'll be interested in it. Which is what we were talking about back over here for this. Things were so overvalued. We needed that. And by the way, they were so overvalued there. What are they now? It's massively overvalued. But anyway, and then we got that. That was the place to start. And how many people made loads of money? I didn't, because I was still waiting for the bear market. I've started making a bit of money, the last few months on it. But prior to that, I was waiting for the bear market. We didn't get it. But we got this And you can go and look at so many charts. Silver, gold. Let's look at the silver chart from way back. Here, where silver took off. And what did it do? It up and up and up and up and up, and eventually bang, up it went again, bang, up it went again, bang. Now, I'm not suggesting you're going to get that with Bitcoin, as you did the last time, but you certainly could get something along the lines of what we saw there with the Dow Jones, where you get a good correction on it, and then you start getting up into your, your 80,000s, your 90,000s, your 100,000s, where people are predicting it. But without that, I'm not going to be getting involved in it, guys. And if you're not in it, I would suggest don't get fear of missing out. If it just keeps going up, well, so what? There's loads of other things to trade. But if you get an opportunity like that, then take a chance on it with a 1 leverage, guys. Not 2, 3, 4, 5, or 10 leverage. 1 leverage, and then let the price do its business. Gold, if you want to see what charts do, yet again, look at that with gold. And then look where it came down to, guys. So you can fib that. Let's just take it from, well, I want to take it a little bit lower than that. Start of that impulse, 50% retracement. Silver. Let's go back. Let's take it from there. 78% retracement. Bitcoin, the last time it went up, %88 retracement. But your initial move, 61, actually flashed on down. I'm not expecting that deep a correction, but you certainly could get something like that. And then people say, hey, this is great. Let's pile into it again. And you can just go on and on and on. Not so much with currencies, because currencies, you're balancing one currency against the other, guys. But with commodities and stocks and indexes, and you get this sort of thing all the time, guys. When everybody's jumping into stocks, when everybody's talking about stocks or Bitcoin or whatever you want to, when people who aren't normally interested in these things, and, you go in, well, we're not allowed in pubs these days, but you understand what I mean. When you get into a taxi and they're talking about shares, a taxi driver's talking to you about shares, or you're in a pub and the guy behind the pub's talking to you about Bitcoin, it's time to get out, guys. And if you're too young to understand that, give it 3 or 4 years and you'll know what I'm talking about, guys. But it's all there in the charts. You don't have to listen to me. Just go and look at your charts. Charts are history. That's exactly what's happened in the past. And by the way, history has an amazing, I can't think of the right word. It repeats itself, guys. History repeats itself. Why does history repeat itself? Because human beings are human beings. We haven't revolutionized. We've revolutionized the technology around us, but human beings are still human beings, guys. And all of this price is driven by human beings. Okay, EuroCAD. Sorry, oil. Forgot to mention about oil. Oil's up and it'll stay up because the world economy is opening up. It's not going to drop back down there again. Anybody that decide to trade oil from the only thing with oil is quite expensive to trade, guys. But anybody that traded oil long from down here, where was it crashed under below zero? I was caught out by that because it was sitting at $20 there. It was sitting at $20, and I said, well, it can't get any worse than this. And it flash crashed to minus $36, as it isn't shown here. And I'm like, you're kidding me. And then it came back up. What was I? Oh, that's a recording, guys. And then it came back up, and we've got back up to here, back on the normal level. So at this level, don't expect. Um, I need to pick a verb. Don't be surprised if it runs flat here for a while. So my call on oil will be flat to long, but certainly not down into that space, guys. EuroCAD. Now, I've been struggling to get an angle on some of these. And the reason being is we don't yet know where the dollar's going, guys. This will be affected by the dollar because the euro will be affected by the dollar. So if the dollar drops as we expect, and not this week because it's going long with this week, but once it starts to go short again, then you'll see a strengthening up of the euro. So this chart will probably push long and maybe give us some sort of flat in here, guys. Too unpredictable, too difficult, just leave it alone. Euro, Oz, same thing. I'm expecting strength from the Oz. So if the dollar goes long, then this will push down. Sorry, the opposite. Let me reiterate this, guys. If the dollar goes long, that won't happen. This will push further down. But given where it is, I wouldn't want to try and trade down through there. That's just a technical thing. But the Aussie, different thing. We're expecting strength from the Aussie. We've had a little bit of strength in the euro recently, as that dollar's dropped, which is the reason why we've had this. But if the dollar continues to go on up, you could well see that moving down to there. I wouldn't try and trade it any further than that because I think the pair are going to do a bit of that. Because if you get euro strength and you get a atomic over on the longer time scale and you're getting Aussie strength, then the only movement you're going to get is the little bit of difference that there is between the two of them. And 1 week, one will be strong, and the next week the other will be strong, and then, you end up with that. And the euro, New Zealand will be the same thing, guys. If the dollar continues to go long this week, there could well be a trade down there. And remember, the opposite's also true. If the dollar, you've got that little spike and then the dollar starts to drop, then this will push up. But for me, it's not worth the risk. So I'm just going to sit and watch these. Euro yen. Well, there was the push up in the euro. Let me just, what were we thinking? This is up 3 hours. Let's get out to 1 hour. Yeah, we called this. I've actually taken all these off. When we were sitting here, what I said with this was, hey guys, listen, see if this drops to there. If, trade it up. Unfortunately, we didn't get down there, so we didn't get into the trade. But it did go the direction that we expected. Now, I'm a little bit unsure about this because that's yen strength, but we've just had this week, had a bit of yen weakness. See that? That's the yen dropping. So I'm a little bit unsure about how that managed to pull down there. And yes, unless that is... you would have expected more if it was euro weakness with a bit of yen strength. You would have expected a bit more. So I'm a little bit unsure about that one, guys. Let's see what's going to happen to the yen. If the dollar were to strengthen up and the yen were to start pushing up, then this would be a good trade. But we've got to wait and see if that happens. Euro Swiss. Well, you can see there I was looking to trade this up. But the Swiss is pulling back off that, and you've got that little bit of strength in gold. So just leave this one for the meantime. It certainly looks as if it's doing this, it could certainly, because I don't draw these in all the time because I'd be here all day if I was to draw these in. If it's going to stay in that, in other words, the euro and the Swiss are, this is vectors I'm drawing here, by the way, guys. That'll all become apparent the longer you watch. So let's say the euro's going long and the Swiss is going long. This is what I was trying to show you earlier. It'll be easier with this. Well, 1 week the Swiss will, get a bit of a spurt on. So when that's happening, then you'll get the likes of that. And the next week the euro will get a bit of a spurt on. And then that's when you'll see it coming back up. So that's what's happening when you get something that's happening like that. If this is going to continue, and say when the dollar starts to drop, then you could well see this pushing up. But you do need to be careful because of that whole gold thing. Listen, guys, when I think there's a trade on here, I'll tell you on that particular day. But we need to just keep the gold in mind. It's not everything, but it is part of it. And the thing about gold is if the dollar's going to drop, then the gold price is going to go up because you're going to have to pay more dollars for your gold, which would push the Swiss up. So, which is probably the reason why this pair so often bounces along like this. Okay, let's move on. Can't dwell too much on this. Let's get move on. Okay, pound CAD was expecting them to run flat. We've possibly had the other downside of that. I can remember over here going, I think it's going to drop, but I'm unsure. It ended up running flat, started to push up, and now it's done this. Now, what can it do next? Oh, well, look at it. It's been running flat for a very long time, guys. It's entirely plausible that at some point along this line, this will start to come back up again. Don't jump in there and think it's going to come up. Let's wait and see. It'll give you a signal. It'll give you time. Remember, this is a 4-hour. And at some point, we'll say, hey, the pound's looking good. Oil prices come off within the flat. Maybe it starts to come long. Can it break out? Well, it can do whatever it wants. Let's go out a little bit and see what's happened in the past. Well, certainly, look at that. But when was this? The problem with this is when the whole Brexit stuff was going on. And that's the reason why the pound was getting so low. Brexit's done and dusted, guys. Can't see the pound getting that low again. So I suspect this is going to run in a range here. Then it's about trying to time it and then try and trade it back up. And if it gets back up to there, provided it all is equal, then you try and trade it back down again. So there's nothing there at the minute, but let's keep an eye on it. Pound Oz. Yet again, that was the whole Brexit debacle. Came up again, looks like it was a bit of a move to safety here with the pandemic last year. And now we've come off there. I suspect it will run flat. But obviously within that, there's going to be a lot of movement, guys. I'm looking for it to go long here. But I'm going to have to wait for the signal. Pound New Zealand's going to be the same, guys. It's come down. What I drew when we were over here, and without going back and looking, I know because when something looks like that, I'll always draw something like that back in the trend. If it gets back in the trend, then you look to trade it up. The only time this doesn't work is when you've got a change of trend. Is this the change of trend? Well, we don't know exactly yet. But if this starts pushing up, I may well try and trade it in that direction. Remember, don't try and trade them for too long. Don't fall in love with them, guys. Take your money, get out, look for something else. Pound Swiss, yet again, there's the push down. I'm having to keep going back to this to see what I'm looking for. Yeah, for me, it's just a bit of a pullback. When the gold price starts to drop again, I suspect that will come down. And it could come down before then anyway. So where are we? Pound Swiss. Zigzag, guys. Maybe it finishes around there, but starts coming back up from there. I'll look to trade it maybe into here in a bit of a range. Pound Euro. Remember, guys, when something's actually set up to go, I'll tell you. I'll say, hey, listen, that's it's just at the minute I haven't saw anything that's doing that. Pound Euro. Oh, this is a pair that I actually don't like trading. Yet again, this will depend on what happens to the dollar. If the dollar strengthens up, then this will go long. And if the dollar goes weak, then this will drop. So we've got to still wait to see what's going to continue to happen with the dollar. Pound yen, well, from away down here, we called it long. It's got long. Let it come off again if it's going to. From here, listen, we drew that arrow from down here. We kind of did something like that. Is that the pullback before it pushes on up? We'll need to look at it more closely. I wouldn't want to try and trade it down, by the way. But if it did come down again, I'd try and trade it long. Aussie yen, looking for strength in the Aussie. From back here, we said trade it long. It's come up yet again. If it drops down into here, trade it up. Aussie New Zealand. Oh, I got long in Aussie New Zealand from here somewhere, guys, and obviously I was wrong. So I'm hoping that it at least pushes back up into that area to get out of it. Why was I trying to trade long from there? Because if you go out into, say, the 4 hour, I was just looking for this to get back up maybe into there before looking for it to start to come off. And why am I doing that? Well, because this pair trades like that, guys. It moves long, it comes back down, it goes up, it comes back down, it goes up, it comes back down. That was a bit of an anomaly there, but it didn't actually go any further than the lowest. And it's come back up, guys. So this is possibly pulling back before you get the next move down. But having said that, look at how it moves, guys. It doesn't just go up and down. This is a daily, remember. So it comes down, comes back up, drops down, comes back up, drops down, back up, drops down, back up. And even here, when I can remember trading these, I just get in, take my profit and get out again with these things, guys. A few times I've tried to ride them for a long time, but you find your costs start to build up as well when you do that, particularly if you're using leverage. So I just get in. If I can get 5 or 10% out of it, get out and jump into something else. You might have a different trading strategy. That just happens to be the one that I'm using at the minute, folks. But I do remember, I've traded this a lot. I'm not entirely sure whether I've been successful at it or not. But hoping to get a little last push up there with this. And then I'll start to look to trade it back down again. Aussie Swiss. It's running flat, guys. The trend for me is up. I'm looking to trade this up. Once the gold price starts dropping off, you'll see that starting to come up. We're on a daily time scale there. Let's go down to the 1 hour time scale. Running flat, as you can see, coming towards the bottom of the range. And you can see from there I said trade it long. From there I said trade it long. From there I said trade it long. It's kept pushing down. But at some point it's going to go long, guys. Aussie Swiss CAD, sorry. There's that strength in the CAD. Wonder where that came from. It's happening Friday afternoon, guys. Or Friday, should I say. Now, yet again, you can see here, when this came down, because I'm looking for strength in the Aussie, I became a little bit wary of it. And then it kind of ran flat. But when it got up here the other day, I said, listen, you could well get a move down to here. How do you get that? Well, you basically just take this. and you bring it over to there, and it gives you there. It's not mathematically, to the point zero. It's a region you're looking at, guys. So you're looking for this to drop down into there. Are you trying to trade it to there? Well, no. If you weren't short here, don't be trying to jump in short there, guys, because it could turn tomorrow and start coming up again. If you're in it and you haven't hit your target and you want to try and hang on to it, put your stop to zero and see if it gets to there. But if you're doing a technical target. If you're doing a percentage target, well, chances are you've hit it. Take your money and then let it set up. And if it gets down to there and starts coming up, then we look to trade it back up again. It's probably going to range from there to there to there because we're looking for strength in both of them. That really looks good, guys. But it's what I'm saying. It's important, guys. Not the nitty gritty of 1, 2, 3, 4, 5, A, B, C. I traded like that for a long time, guys. It's just really, really frustrating because it goes wrong so often. Give yourself space and time. And how do you do that? You do that by keeping your leverage low, folks. It gives you plenty of space and time. Okay, Swiss yen. This is one that I got a lucky escape with this one, guys. Yet again, we talk about the mistakes. Why? Because we learn from the mistakes. For 5 years, I think it was about 5 years, 4 years, this had stayed in this range. And when it came up to there, I traded it down. Daily time scale looks easy, but I kind of tried to trade it down, got a little bit hesitant, ended up broke even. Tried it again, broke even, missed a good trade. When it got to there again, I tried it again, but I was a little bit wary because I thought to myself, you know what? This actual move on a daily time scale looks like it's got a good trend going on it, and it possibly hasn't finished yet. So it's broken out. Does that mean that it's done and it's, excuse me, folks, and it's going to go? Well, I don't know the fundamental argument for that yet, but there certainly is times when that's happened, guys. If you ignore that spike, and I don't entirely know why we got that spike, was that 2011, 29? Well, that was the crash. I don't know what that was all about, but there's kind of a, let me put that back. There's kind of a flat. If you take that out of it, guys, there's a period of time where it's run flat here, and then eventually it broke out and we got this. You go further back, it hasn't run flat for very often, has it? That was one big, long, continuous move up. I wonder if you put gold over the top of that. What's gold? AUX. USD. What on earth's going on now? I've been trading gold for years and all of a sudden XAU. What am I on about? It's XAU. And then you want it against the dollar, don't you? So nope, that's not doing much for us, is it, guys? I thought we might have got a. I suppose if you put the Swiss, index on there, you would see the correlation. There you go. There's the Swiss currency index, and there's gold, guys. So there is a definite correlation between them. Obviously, there's other things that also affect the value of the Swiss franc, but there is a correlation with gold, guys. So let's get rid of that. Let's go back to where we were. So at the moment, I don't know if this is going to be a big breakout and a run, but we will certainly keep an eye on it. Remember, in a daily time scale, we'll keep an eye on it over the next few days and weeks, and we start to see an impulse here, guys. Well, we'll certainly try and trade that. CAD Swiss, my old pal, been trading it long from here. I actually tried to trade it long from there and lost a bit of money because it kept falling. This was during the start of the pandemic, guys. But from there, we more than made up for it. It's been running, kind of like that with a correction and then like that. So we've been jumping in and out of it. But if we go back over to here, I don't do very many charts these days, guys. Can't find it. Find the chart up here. Where are my charts? Yet again, we said it'll move long to the top of the channel, and then it'll break out and go long. So we weren't, when it's going to move. I don't have a drawing tool for this, guys. But when it's going to move that distance, obviously it's not going to move in a straight line, guys. But you're going to get a move up, a pull back, a move up, a pull back. And there you go. And we actually drew it out. We said, listen, it'll probably move up like that. And then we said, well, it's breaking out. And then it already broken out. And we just kept saying it's going long. That was the same arrow. We hadn't moved it. We still haven't moved it. Oh, we must have moved it in the meantime, guys. But that was the same arrow through all of those. We didn't move them, guys. And there you go. And then we were talking about where it opened there, closed there, opened again there, closed there, and then we opened again there. And then what did they after that? I think we got that after that. Can't remember. No. Yeah, that was after there. That drew back down again. And then after that we got the big impulse that went. Now I'll be honest with you, I was out the time it did this because my target was, I think, 5% or something. Every time I hit 5%, we were closing it. And then when it took off, we didn't have a setup for it. The 5% only works when you're trading corrections, guys. If you're in an impulse, then obviously you're going to have to allow it to run beyond 5%, or you'll miss it. And you'll not always know that you're in an impulse. Sometimes you'll close it too early. So getting back to today, what's going to happen next? Well, that was a little bit of a pullback there on the CAD, but on the Swiss. But as we saw recently, the CAD's pushing up. I'm long in this one, guys. I'm going to close two trades on the way up here. I've still one on. I'm hoping that it pushes on up and gets up to there. There's no setup now. I got in down here somewhere, guys. Might even get in over here. But certainly expecting it to get back up to there. And then maybe we get a bit of a sideways run like this. Then each time it drops, we just trade it up, trade it up, trade it up. Probably been my best trade over the last year is the CAD Swiss, guys. And then CAD Yen, that was the one that really went. And because I was in the CAD Swiss and had 3 trades on it, I decided not to go for this because you're putting too many eggs in one basket, as I say. But that was the trade to have. Look at it. So what are we looking for next? Well, as you can see there, I drew these on Friday. You're looking for a bit of a pull back from here, guys. If it comes any deeper, fair enough. We'll trade it back up from there. New Zealand Yen. Yep, when it got into there, we said look for a pullback. And then, other than that, if it breaks out, then you're looking for a correction up there. And your trade would be from that correction. It didn't pull out of there. It didn't break out of there. So you've got to let it, what are we talking about, the yen? Now, the only thing with the yen, we've got to keep an eye on the yen to determine whether it's going to strengthen up. I'm looking for strength in the New Zealand, But if the yen is going to strengthen up, and we don't know that yet, guys, but if it does strengthen up, then you could well see a downside to this. So we'll keep an eye on it for a while. If we see the yen continue to push up, and we'll look at the fundamentals and what's the reason that it's getting strong. And if that's true, then we'll look to trade something, but not way down here, guys. Maybe within a range here. But if it does get down to there and you decide not to try and trade it, your next move will be up there, folks. New Zealand CAD. Well, you can see I was looking to trade that long. Look, and then up it came again. I'm not saying that's definitely going to happen here, but if it does start to move back up, then you could well have a trade there. You're not looking for it to go way up there, guys. It might well range within here. So my advice is don't worry too much about technical targets. Get a small target when you're a little bit unsure. There will be times when we know and we go, hey, dollar's doing this, guys. It's reached this bottom. It's on the way back up. Could well be coming impulsively. Let's trade technical targets. But when you're unsure about something, take 5%, 10%, guys. Keep a low leverage and keep an eye on our analysis here, guys. Okay, that'll do it. Oops, there's one more. New Zealand Swiss. Another one that we're looking to break out long. So I'm going to have to wait to see how much the Swiss is going to strengthen up. Once the gold price starts to drop, this will start coming back up, guys. So for me, the trade's still long, but we're potentially in something like that. So it could well push down there. If it pushes to there, I'll look to trade it long because I think ultimately it'll break out and go long. I'm not in that, so... Oh, we did trade that, didn't we? Ooh, wonder am I getting battered? Or did I get out? I certainly know I traded up here. Or was it up here? And I took my profit, and then I got in again here, so I might even be in the red with this at the minute. So I'm hoping it comes back up from here and doesn't drop any further. But I've got a very low leverage on it. And a pretty wide stop loss. So I wouldn't be concerned about it going down there. It's just, it's not comfortable when it's going in the wrong direction. But if it gets to there and all's well, then we'll add the position. We'll trade it back up, guys. Okay, that will do for this weekly analysis, FX analysis. But we'll also do lots and lots more on a daily basis. And we also do our individual shares analysis of those, doing fundamental and technical with those. Okay, guys, do the usual thing. Remember to subscribe and blah, blah, blah. Okay, speak to you all again soon. Bye for now.